Hey, what's going on, guys? We're going to give it a few minutes and then we'll go ahead and get started. Hope everyone is doing good today. I know the market's been very, very volatile, especially with the recent drop that we had. We'll go over that and then we'll go over how you guys can trade around it and specifically around macro events, because it's a big, big topic that a lot of people are still very unsure about and how to measure those macro events, etc. So we'll give it a few minutes, let everyone get in here, and then we'll go and get started. What's going on, Glitchin? Good to see you here. Good familiar faces there. Should see some more people show up shortly. Wealth Bands, Awkward G's, Wealth Management Brand. What's going on, guys? Good to see you here. A lot of volatility today, so we're going to go over it. And we're going to go over exactly what you guys can expect moving forward and what you should be looking at. So give it another minute or so, and then we'll get started here. What's going on, Victor? Things are going good. Things are going good. Just being patient right now in the market and just waiting for things to clear, right? For that dust to settle. I do have some limit longs placed lower, specifically on Ethereum. And we're still waiting for that trade to hit. But I believe during these volatile events, it's always best to, if you're going to long, place your longs much, much lower, because volatility more times than not is going to tap it. What's going on, Maddie? Good to see you here. A lot of regular people here. Love to see it. We got 21 views and 5 likes. If we could like the stream, guys, that'd be awesome. It's going to get more people in the stream. More people are going to get notified that people like the content that is being streamed. So it's going to be a great stream, so definitely stay tuned. But awesome. Well, without further ado, guys, let's go ahead and get started. So the big thing today is how to trade around macro events. Now, does anyone know what big macro event happened early this morning? Can anyone tell me, or I should say no, yesterday. I should say yesterday, Sunday. Does anyone know what big macro event happened that caused this drop? Can anyone tell me, or can anyone tell me the reason for this drop? Anyone in chat? I'll give it about 15, 20 seconds. If anyone can tell me the reason for this drop. It was a macro event, but does anyone know which one? I'll give you a hint. It wasn't quantitative tightening ending today. That wasn't it. What macro event, guys? It was another country. Does anyone know what other country caused this? Yes, Maddie says Japanese bonds. Exactly. So, Japanese bonds. Why is Japan affecting the U.S. stock market? What's going on here? Well, this is exactly why I made this stream. Because when you understand macro events and their effect in the space, you can understand how it affects price and how you can trade around them before and after those events happened. So trend flow says Japanese 2%. Hey, Luis, what's going on? Let's see. Wealth Band says wouldn't have a clue. Luis says I believe algo's reset. Nicholas says Japan. Yes. So yes, Japan, guys. So basically what happened, and we'll go over this actually as we start. Let me see. We'll go over this, and let's actually go ahead and start the slides, and then we'll go into the reasons as well. So why macro matters in crypto? Macro events drive liquidity, volatility, and risk sentiment. So we've seen clearly what effects they can have. Now, the reason for the drop was because Japan raised the rates on their 2-year treasuries to 1%. Why is that a big deal? Well, in the past, people would borrow, even still, people take out loans from Japan, from the Bank of Japan, and they borrow at a very, very low interest rate. And then they'll turn around and invest those into the U.S. Treasury bonds or other high-yielding assets. So let's say they borrowed from Japan at a 0.1% or 0.25% interest rate, and then they go ahead and invest them in the Treasury bonds at like a 0.5% or 0.75% interest rate. Well, they're making free money off that spread because the Treasuries are backed by the government, right? So those aren't going to default. At least that's assumed. And so they're making money off that spread. So why wouldn't they continue to do that? Well, what happens is Japan, just like they did yesterday, raised their rates, and now that spread isn't there, or the profit they're making is basically gone or very, very little, and it's not worth the risk of taking it on. And so what happens? Well, then they sell off those bonds. They sell off their risk on assets to basically recoup any money they need to pay, and then they return those loans. And so we saw that with the Japan carry trade unwinding August 2024 of last year. We saw the price dump. And the big reason for that, I mean, and there's a lot of FUD around this too. If you guys look at August 2024, I mean, just a lot of things happened. And so that's why when I was making the ETH trade, I was like, well, let's just chill out a little bit because we don't know how deep this is going to go. And that's exactly what happened. We got a big drop. Bitcoin went down to 85.8K. It bounced a little bit, and then it just crashed further. And so you're seeing the effects that that has on price, on sentiment, and more. And so that's the big thing to watch out for, is just you have all these different sentiment indicators, and now you're seeing the effects on the Japan situation. And so now the best time is to be patient. And we'll talk about that a little bit more. Hey, no problem, Musa. Says, thanks for the great values. Anytime, anytime. And so that's the big reason there. Now, let me actually see if I can, 1 second, guys. I'm going to see if I can actually add the chat real quick onto the stream. So let me go ahead and get this chat here, and I'll have it in the bottom right. There you go. So you guys can see the chat. So that's the big reason, okay? Now, Bitcoin behaves like a high beta macro asset. So the biggest thing with that is whenever you have good news in the market, Bitcoin's going to really excel that, or it's going to amplify that, right? Betas plays, think of it as an amplifier, both to the upside and downside. So if there's good news macro-wise, awesome, Bitcoin's going to just send. If there's bad news, well, Bitcoin's going to drop much more. So you have to understand macro cycles to improve your win rate and timing. Because the big thing here, again, if you don't understand macro cycles, then it's going to make it a lot harder to understand what's happening with price. And it's going to seem like it's very random. And then lastly, understanding macro cycles improves win rate and timing. So the second thing with this is just, again, it'll help you manage risk as well when you know upcoming macro events that are happening. So key macro events to watch: FOMC meetings and interest rate decisions. So the big thing with that is, who knows when the next FOMC meeting is without looking on Google or ChatGPT? Does anyone know when the next FOMC meeting is? What date? What date this month is it? Curious if anyone knows that. Because a lot of times people are oblivious to it and they aren't aware of these big events, and there's a lot of volatility and they don't know why there's volatility. So I'll give another 10, 15 seconds. What's going on, Sparacos? Good to see you here. I'll give it a few minutes. Okay, yep. Trend Flow says 10 December. Yes. December 10th is the next FOMC meeting where they're going to tell us if interest rates are being cut or not. Now, what's the next level to that? Well, you look at Polymarket, the chance of a rate cut is already 88%. So they're going to cut rates. And then you got to think of game theory. Well, have people already priced in their cutting rates? You see how this can turn into layers upon layers of analysis? And so that goes with also looking at other decisions. So a lot of people are saying December 12th, 9th, 4th, 10th. Yeah. So see, this is my point actually, is a lot of people don't know exactly when these dates are. It's December 10th is when Jerome Powell's going to have the decision and then his talk after. And you can look at the Fed calendar as well. So just type in Fed calendar and then you'll see the government website and you'll be able to look exactly when the date is for those. It's 9/10, but then the 10th is actually the decision day and then the speech afterwards. And then you have CPI, PPI inflation releases, so how consumers feel, NFP job reports and unemployment data, GDP releases, Fed speakers and policy shifts. So all of these events, right? All of these events are going to incur volatility. What's going on, MDZ? Good to have you here. Appreciate the compliment. So Lucas, we'll actually talk about that as well. So see, we're covering a lot of this stuff for you guys. It's going to be a really good stream, guys. So we have all these 5 events. And a lot of times people look at these events and they won't know if it's good or bad. Is a rate cut good? Is a rate cut bad? Is CPI hot bad? Is CPI being cooler than expected good, right? What's the actual outcome of this? Well, I would say it depends, because it's not as black and white as this is lower than expected, it's good. This is higher than expected, it's bad. There's other things you have to look at, but I will say this. For interest rate decisions, usually an interest rate cut is good, and usually an interest rate hike is bad. Because when you cut interest rates, you're essentially making it cheaper to borrow a loan. So consumers have more discretionary income, therefore they can buy more risk on assets like crypto. Whereas if you hike interest rates, then things become more expensive, loans become more expensive, etc. It becomes more expensive to own a house. You see what I'm saying? So usually interest rate cuts are a net positive per se. Now you can get into all kinds of data. Well, does it spike inflation, etc.? We're not going to get into that. The biggest thing is just knowing in general what is good and bad for the economy, and knowing what events have the most volatility. FOMC meetings and interest rate decisions are the biggest volatility days. Now, also, you have liquidity data, quantitative tightening, quantitative easing. Does anyone know, I mean, it's almost a trick question, but does anyone know when the Fed is planning to end quantitative tightening? Does anyone know that? I'll give it about 10, 15 seconds. And I say this because quantitative tightening, think of quantitative tightening as almost putting a ceiling on how much money the Fed can print, and kind of in general a ceiling on, any quote unquote stimulus actions the Fed can do. Now, quantitative easing is the opposite. Quantitative easing is turning the money printer on. And so that's the biggest thing, guys, is being able to know, okay, quantitative tightening ending is positive, quantitative easing starting is positive as well, and vice versa. Because what's happening is with quantitative easing, the Fed's going to inject more money into the economy, more monetary stimulus, etc., and basically just pump money into the market. Now, and yes, everyone said today, quantitative tightening is ending today. Very good. Very good, guys. Awesome. So why is that important? Because quantitative tightening ending opens the door for the Fed to start quantitative easing. But here's the caveat. The Fed's not going to start it right away. The Fed isn't going to start quantitative easing the day after. At least I don't think. Historically, like trend flow is saying, 3 to 6 months. 3 to 6 months, the Fed starts quantitative easing. So now becomes the game of, well, heck, if the Fed's not going to start quantitative easing for 3 months, what else do we have to look forward to? Maybe more interest rate cuts? Well, that's going to determine, interest rate cuts are going to depend on the FOMC meeting December 10th and what Jerome Powell says. Now, Jerome Powell is also speaking tonight at 7 p.m. Central Standard Time on quantitative tightening, or at least on policy, and he's going to have a panel discussion as well. And so that's going to be an insight into what his outlook is in the market. And outlook is arguably more important than the actual decision, because people already know interest rates will be cut December 10th. It's basically a given. If you look at Polymarket, look at all the insiders, it's an 85+% chance that's going to happen. But what's not known is his outlook, okay? What's he going to say afterwards? Is he dovish? Is he hawkish? Dovish means bullish, hawkish means bearish in TradFi terms. Is he planning to cut rates next year? Or is this month the last month he's going to cut rates? If this month is the last month he's going to cut rates, it's going to be bearish. If he's going to cut rates next month, cool, bullish, right? It's basically as easy as that. Is Jerome Powell going to resign? There's rumors he's going to resign today. I seriously doubt it. But whenever Jerome Powell does resign and Trump gets his new Fed chair in, they're going to do whatever Trump wants. Cut more rates, start QE, etc., right? So again, you guys, you got to be thinking about all this. I know it's a lot to think about, and I'm not trying to fill your head with unnecessary data. This is key macro events to watch. It's just these, right? You're not having to watch everything. Obviously, the Japan situation is another one, which would be good to know. And that's where studying historical data also comes into play. So things like that, you can even ask ChatGPT, what are major events to watch for? Now, how macro impacts crypto price action. And I'll answer some of your questions as well, guys, very, very shortly. So as we were talking about earlier, rate hikes means liquidity drain, means Bitcoin goes down. Rate cuts means risk on rotation to crypto, Bitcoin, ETH go up. Hot CPI, volatility spike, it's going to increase sell pressure. Weak jobs data, recession fears, mixed reactions. And then the Fed dovish tone, altcoin expansion. So it means the Fed's bullish, altcoins rise. So this is the main one, right? Rate hikes and rate cuts. Just memorize this. This is basically pretty easy. Now here's where game theory comes into play. Because a lot of times we've had rate cuts, yet price goes down afterwards. Why is that? Well, that's where you talk about game theory. Game theory is very important in crypto. Game theory, in a nutshell, you're trying to predict what the other person's going to do before they do it. So, for example, okay, we know now that rate cuts, or let's start from the beginning. Rate cuts are bullish. Okay. Do we think the Fed is going to cut rates December 10th? Well, if you would have asked us, a couple weeks back, we would have said, probably not, because the chance of a Fed rate cut was 22%. And then we saw how quickly that shifted based off of comments from a few people. And the chance of a rate cut went from 22% just a few weeks ago all the way up to 70+% a few days ago. And so you saw that shift. And when that shift happened, Bitcoin started to rise. We started to get some more euphoria in the market, or some more hype in the market, right? Because now with Polymarket, if you keep an eye on that, there's a lot of insiders that bet on Polymarket prediction platforms. I'm sure you guys know that, but just if you didn't, there's a lot of insiders that bet on these prediction platforms. Because why wouldn't they? It's free money, right? If they know what's going to happen. And so when you see the chance of a rate cut up to 70%, well, how long is this effect of people knowing the rate cut is going to happen? How long is it going to have an effect, right? Meaning, how long is price going to continue to rise? Because the longer, and basically what's happened now, Polymarket is showing, I think, an 85-88% chance of a rate cut. And so that, and I haven't looked at it, actually, I probably should look at it just to make sure. I don't want to tell you guys wrong data, so let me just double check and look at it. The chance of a rate cut right now is 89%, okay? 89%. And let me show you guys a link real quick. And let's see. Would it be possible to share this PowerPoint? If you're in the paid Gym Hunters group, I could share it with you. Or if you're in my other group, my private group, I can share it with you. I don't know if I can share it on YouTube though. But I mean, feel free if you want to DM me on Discord or X. Really, Discord is where it'd be the best. Discord is CryptoData. But as far as pricing in rate hikes or rate cuts, and so now we have the chance of a rate cut being 89% on Polymarket, okay? So now the front running begins. So game theory is saying, okay, let's call it layer 0. Layer 0 people say, well, if they wait until the day of. So they wait until December 10th for the FOMC meeting. And if the Fed cuts rates, they say, okay, I'm buying. And they buy the news, okay? They buy the news thinking price is going to go up. And while price goes up a little bit, price usually dumps, depending how long these interest rate decisions were telegraphed. And so if you know 2 weeks prior or a week and a half prior that the Fed's going to cut rates because the chance on Polymarket has risen to 89%, well, wouldn't you start buying ahead of that, right? And so that's why you see price rise. And so the chance of a rate cut happening is basically a certainty at this point. And so any smart person would buy ahead of that. And then the people who aren't paying attention to Polymarket, aren't paying attention to the chance of a rate cut happening, they're the ones who are going to buy on the FOMC meeting day, and they're going to get trapped. And then price is going to drop a little bit because everyone else has already front ran these rate cuts. That's the game theory, okay? So the game theory person says, Well, if I know rate cuts are going to happen, I'm not going to buy here. I'm going to wait and buy before, right? So layer one is buying ahead of it, front running it. And then you think, okay, well, when are they going to sell? So layer one people would sell on the news day. Layer two people they know that layer one people are going to sell on the news day, so they're going to sell a day or two prior. You see what I'm saying? There's all kinds of game theory of, okay, buy the rumor, sell the news. Oh, sell a day before the news, sell 2 days before the news, or you know what I'm saying? So there's all kinds of different game theory things coming into play. But the matter of the fact is, if you know that rate cuts are going to happen, why wouldn't you buy ahead of time, right? And then maybe use the day of that news as exit liquidity to sell on the pump. So that's something to keep in mind. All right, let me go ahead and answer a few questions for you guys. Let's see. Yep, cuts are beneficial for crypto. Let's see. Small Sabira says, do you think cuts will get front ran this time? I think so. I think so because of how much or how high the percentage of a rate cut is right now. It's 89%. And so I think that anyone who's going to buy is going to buy right now. Because if it was, say, 60%, no, I think rate cuts happening on the FOMC day would be bullish. But now, maybe just a short-term pump than a drop. Again, a lot of it's going to depend on Jerome Powell's outlook. Lucas says, do you think Bitcoin is going to keep dumping or will a low start to form for a reversal? So here's the thing, right? Lucas, it depends on what Powell says today as well. Because remember, we're having the quantitative tightening in today. And he's going to have a speech at 7 p.m. CST. And so depending on what he says there, if he's telegraphing more rate cuts for next year, or maybe quantitative easing starting earlier than expected, then Bitcoin's going to bottom. But if he doesn't have any of that, if he doesn't telegraph any of that, then we'll probably continue to chop, maybe decline a little bit more. AA Twilo says, thanks for the work you put in. What do you think happens to silver next? I think precious metals are a safe bet. And I say that because there's always uncertainty in the market. There's always uncertainty, right? No matter what, there's always something going on with another country, something going on with the economy. And so holding gold and silver, I think silver's going to go higher, to answer your question. So I think it's just a safe bet to have a little bit of that in your portfolio. FX says, Polymarket isn't available in Belgium. Even a VPN doesn't work. Oh, that's unfortunate. That's very unfortunate. Maybe make sure you're trying NordVPN and try to like open an incognito browser and then use the VPN. Eric says, hey, what's your view on the new ETH update on December 3rd? Great question. So I actually posted a long trade in Gem Hunters. If you guys aren't in the free Gem Hunters group, links in the description. If you want to join the paid one, it's 1 ETH for a year. But I actually posted a trade and I said that historically ETH pumps a couple days after its upgrade. So the Pectra upgrade happened last year. I think it was in May, and we pumped a few days after. So now, yes, the economy is a little bit different, or the market's a little bit different. But I am still tentatively bullish on ETH. I still have limit orders placed for lower between 2630 to 2680. It's very, very possible we reach those numbers. Hopefully we don't go lower than that, but those are the levels I've placed the orders at. And so that's what I'm prepared for right now. Excuse me, guys. And so we'll see what happens after that, right? But I am tentatively bullish on it. I don't think ETH is going to pump right away on that upgrade, but maybe a couple days after. As long as everything with this whole Japan situation dials down. Again, macro usually trumps anything technical. So macro-wise, if Japan doesn't taper down on their rates or any of that, obviously the market's going to keep dumping. But if they do, if Trump comes in agreement with them, then we're going to be fine. So again, it all depends on that. Great questions, guys. Next, pre-event trading framework. So reduce leverage 12 to 24 hours before events. This is what I tell everyone, guys. Don't try to trade these events. Don't try to trade high leverage. I say reduce leverage 3x max. 3x leverage max ahead of these events. Why do I say that? Because you've seen how volatile these are. There's whipsaws to both sides. Longs and shorts both get wrecked. So 3x leverage so you can widen your stop. You can survive it. Identify major liquidity pools. So like HighBlock, CoinGlass, Velo, a lot of these platforms that show you the liquidation data. Make sure you guys are paying attention. Because at the end of the day, when you see where the liquidity is at, then that's where the price is usually going to go. Expect positions to be engineered towards max pain. So for example, on CoinGlass, like on my weekly market overviews, when I go over liquidity heat map and I go over all these concentrations of liquidity, let's say there's a lot, because there was a lot lower, right? When Bitcoin was around 91K, there was a ton of liquidity around 89, 88K, etc. So I said, well, we're probably going to drop a little lower. And what happened? We dropped a little lower because the market makers make money when people are liquidated. That's just the way it is. They hunt for liquidity. Max Payne scenario. That's why only 5% of traders win and 95% lose. Because when the masses are long, well, what's Max Payne? Obviously short to the downside. And that's what price does. So guys, get familiar with reading liquidity heat maps. CoinGlass, High Block, either of these. Avoid large directional bets pre-event. Don't try to get smart and bet ahead of the market. Don't try to say, well, I know rates are going to be cut, so I'm going to go long. High leverage. No. Yes, rates will get cut. It doesn't mean price is going to go up because people are front running it. Game theory comes into play. Maybe there'll be a short pump and then there's going to be a dump afterwards, right? You see what I mean? There's all kinds of things you have to think about prior to these events happening. Tazuli says, what do you think about all the liquidity gaps forming between 90 to 88K on Bitcoin, one after another? How come is that? So liquidity gaps could be forming because you have overconfident shorts. People are opening more shorts, therefore their liquidation levels are higher, right? So you have liquidation levels near 88K, 90K because more shorts were opened, and that's where they're like, even currently more shorts have been opened, their liquidation levels are near those prices, or shorts were open near 86, 87K, and their liquidation price is 88K to 90K. That's why. During event playbook, so while the event is happening, while the CPI numbers are going on, the PPI, the FOMC meeting, interest rate decision, QT, QE, etc., expect spread widening and fake outs. So what does this mean? This means what I was just saying earlier. There's going to be whipsaw actions. There's going to be price pumping and then price dumping right after and vice versa. So if you have your positions open, make sure it's low leverage so you can widen your stop loss. The first move is usually a trap. Like I said, oh, rates are cut. Awesome. Little pump and dump. Because people have been front running it. Be mindful of this, guys. Wait for the second impulse move. So if you have a pump, dump. If you want a long, maybe long on this dump, right? Wait for that second impulse move to play out. Use low leverage and tighten validations. These dates or these events are extremely volatile. Therefore, you have to manage your risk accordingly. Post-event strategy. Okay, events happen. We pumped and we dumped, and now we're cooling off. 1 to 3 hours after the event, trend clarity emerges. What also happens 1 to 3 hours after the event? Jerome Powell speaks, if it's the FOMC meeting. He speaks, I believe, an hour to an hour and a half after the event. And so he's going to tell you his outlook. He's going to tell you what's going on, what he thinks, if he's going to cut rates for next year or not. Then you're going to have a clarity emerge. And then you'll see price start to bottom out and then choose what direction it wants to go. Confirm direction using volume and open interest. So open interest is, in a nutshell, new positions being opened. It doesn't mean they're long or short. It just means they're new positions being opened. When you combine that with volume, let's say you have a big green candle and you have open interest rising and prices rising, well, obviously more longs are being opened. If you have a big red candle, price is dropping, open interest is increasing, obviously more shorts are being piled in. So that's how you can help determine that. Re-enter with trend continuation setup. So let's say you're crossing above a major 200 EMA moving average. Well, then maybe the trend is now continuing to the upside, a bullish uptrend. Okay, cool. You have trend continuation now. But you have to look for volatility contraction as well after the spike. So the Bollinger Band with percentile. So volatility is near all-time highs during these events, around these events. Once volatility contracts and it settles down, then you can start taking your positions. Again, this is all a process. Indicators for macro trading. So you have the Bollinger Band with percentile to help determine volatility, compression, expansion. You can find this for free on TradingView. You have open interest, fake outs versus real moves, making sure that the volume and the price is matching with what open interest is doing. You have funding rate shifts. So for example, if you have funding going from negative to positive, if longs are being paid and you get shorts being paid, that tells you the change in positioning accordingly. You have the VIX, VIX-like volatility indices. So VIX is the volatility index. So if the VIX is super high, volatility is super high, wait for it to cool down. And if it's very, very low, well, expect for it to spike. So you want to wait till it gets to that middle ground. The DXY, 10-year treasury, and liquidity signal. So the DXY is the dollar. Dollar is inversely correlated to Bitcoin. DXY falls, Bitcoin usually rises, and vice versa. If you chart the DXY, it helps you actually determine what's going to happen in the future. So pay attention to that. And then risk management principles. So this is arguably the most important. Use half-size positions around macro days. Guys, don't bet everything. Don't act like you know what's going to happen because you know interest rate cuts are going to happen, so you expect price to rise. No, it's not that easy. It's never that easy in the market. So only use half positions. If you're using 5% for leverage trades, use 2.5% instead. Never chase the first candle because like we mentioned, it could be a fake out. Protects capital over catching tops and bottoms. That's more important, waiting for confirmation versus trying to knife catch or trying to top tick. And then focus on Bitcoin, ETH, and majors on macro days. Don't try to trade small meme coins, low caps, because if you think about it, if Bitcoin drops, let's say 3%, what do you think those meme coins are going to drop? 20, 30, 40, 50%. It's going to be huge drops, okay? Low caps are much more volatile. So during these major macro days, just trade the majors. It's going to be less volatility, and it's going to be better for protecting your capital. So in summary, macro events create predictable volatility. We know when an event is going to happen. There's literally a date, a calendar. It's going to tell us when the FOMC meeting is, when quantitative tightening is ending, because Jerome Powell said that in his last speech, right? He said it was December 1st, when CPI data is, PPI data, etc. The best strategy is prepare early and then wait for confirmation. So you've prepared early. You were buying ahead of the interest rates being cut. Cool. This Japan carry trade unwinding happened. Unfortunately, caught a lot of people by surprise, but we know why price is declining right now. Waiting for that. And so now you're prepared and you're ready. You know, if you're going to trade on these days, I still recommend not trading on these days, but if you are, just make sure you're preparing, you're using half your position sizing, lower leverage, you're waiting for confirmation after that initial fake out, right? Waiting for trend confirmation, etc. You're using liquidity maps and volatility indicators. So where's liquidity set? Are more people short or long? Price is probably going to go for max pain to liquidate those. And then look at volatility indicators. If volatility is near an all-time high, just wait for it to settle down a little bit. And then post-event moves offer the highest probability setups. Wait until the dust settles, guys. I have to press this because most people try to trade during the volatility and they get chopped up. Easy as that. And to wait at least 1 to 3 hours after Jerome Powell's comments for things to settle, and then you can see where the market wants to go after that. Volatility is going to decline, settle down, and you'll be able to see where price is going, where volume is going, where open interest is going, etc. So MDZ had a question. Do you know Bitcoin had an aggressive move down to 84K when meeting resistance at 91K? I couldn't find any news regarding this. So MDZ, this is what I've been talking about during this stream. It was because of the Japan carry trade unwinding. So quick TLDR. A lot of people borrow loans from Japan, invest in treasury bonds. They make money on the spread. When Japan raises rates, that money to be made basically cancels out. There's not really any money to be made on that spread. Therefore, they sell their assets, they sell their loans, they sell their risk-on assets like crypto. And that's what happened now. Japan raised rates on their 2-year to 1%. And so most people sold their risk-on assets because of that, because the spread in profit declined heavily or disappeared completely. And so they sold their risk-on assets, and now we're here where we're at. So yeah, it was because of Japan. So I tweeted about it as well. But this stream will be posted on the Jim Hunters YouTube channel afterwards. It's being recorded, so make sure you guys check that out if you haven't. I'll give it another 30 seconds if anyone else has any questions. But the biggest thing, guys, with this is I wanted to make sure you guys are prepared with all these macro events, because yes, the market's volatile. Yes, no one's having fun. But at the same time, you can help predict these, and you can still use your technicals, right? We saw there was resistance near 92.8K. So you could take a tentative short and say, okay, well, a daily close above that would be bullish. And so that could be your invalidation, right? There's all kinds of different things you can do for invalidation and these setups, but you just have to be able to know these big macro events that are happening, engage that volatility, and either A, not be in a position at all, just be in staples and wait for clarity after the initial drop or pump. And then 2, just know what effect that's going to have on the market moving forward. Musa says, hey, can you please, if you have time, of course, do a live stream where you show us how to identify support and resistance lines and how to mix them with indicators? Yes, Musa. So actually, if you go to the Gem Hunters YouTube channel and you go to the live tab, the 3rd video from the bottom, technical analysis basics. It's actually going to tell you everything you need to know with support and resistance. So go to the Gem Hunters YouTube channel, go to the live tab, and let me go ahead and find that for you. Give me 2 seconds. I'll find it for you. So, all right, technical analysis basics. Here you go, Musa. That's the TA video. And then I also have another one where I talk about indicators. 1 second. Here you go. Here's another one where I talk about indicators. So watch those 2 videos, Musa. Make sure you save those. That's where I talk about the basics of technical analysis and indicators. Also, guys, if you aren't following me on X, definitely do so. At the CryptoData is my X account. So definitely follow me on there. Check out my pinned messages, all my things that I post. I actually posted about this Japan carry trade unwinding happening. So I posted for the reason for the sell-off. So make sure you guys are staying up to date with everything I post there. Lewis says, weird question, but if you wanted to pump Aster with a burn, would you do it all in one or go progressively? So if there's a buyback and burn, then I would do it progressively, because usually after a sharp pump, usually get a big dump. And so I would do it progressively with those buybacks, and that would instill confidence and allow people to speculate. And over time, we'd see price stair step higher. Because if you do it once, well, price jumps, but then what's the catalyst afterwards, right? You got to have a trickle effect. Bayo Edit says that blog cat indicator you mentioned earlier, does rocket ship mean bottom and red dot mean top? Yes, Bayo Edits, yes. On my other indicator called Synergy, it's a custom indicator. Rockets mean bottom, alarms mean top. MDZ says, also, did you see a 1 billion USD move on CoinGlass? Then again, 1.42 billion move. What does this show? Oh, yeah, for 24-hour liquidations. Yeah, right now, for 24-hour liquidations, we're showing 965 million. And this is the liquidation data, guys. I'll link this as well. There's the liquidation data for CoinGlass, where you can see the past 24 hours. Right now, it's 965 million. But yeah, when you get towards a billion, usually that marks a local bottom within 1 to 3 days. But again, it depends on a lot of different factors. Not as accurate as it used to be because we're technically in a bear market now. So yeah, hey, no problem, Lewis. So yeah, I would say technically if you have over a billion liquidations, it does mean a local bottom is near, but not as accurate when you're in a bear market. But just, yeah, I would still say that more times than not, that should play out. Tazuli says the technical analysis basics for the 3rd video from the bottom is like the most watched video on this channel. Great one. Tazuli, make me laugh. Yes, right? I know. So many people have asked about it. I've recommended it so many times. It's hilarious. But it's good, though. I mean, I'm so glad you guys are learning. And that's really what you guys need to do, is just learn the basics at the end of the day. Learn how to draw support and resistance lines. Learn how to use the basic indicators like the RSI, stock RSI, the 50 EMA, the 200 EMA, etc. Because that's all it is at the end of the day. These big institutions, yes, they're using high-frequency trading algorithms. Yes, they're using custom indicators. But at the same time, they use the basics, right? Because the basics work. And that's why they've been around for so long. So that's, if I can stress anything to you guys, just stick to the basics and just learn these basic principles and you will be successful. So also, if you guys haven't liked the video, 39 viewers, 27 likes, that'd be amazing, guys. It helps spread the video to the masses. Also, if you haven't joined the free Gem Hunters group, link in the description. Paid group is 1 Ethereum for the Gem Hunters Premium. And then also check other links in the description. Follow me on X if you haven't, at the CryptoData. I linked it just 2 links higher in the comments there. And also just watch his YouTube videos for TA Basics as well. But thank you guys so much. I appreciate you guys watching. Hope you guys have a great rest of the week. Love you guys. And hopefully